Hi everyone, welcome to another podcast. And today we will be talking about this relatively lesser known index, the Nifty Non-Cyclical Consumer Index. So Groww Mutual Fund has come up with an NFO which is based on this particular index. It's called the Groww Nifty Non-Cyclical Consumer Index, which is open for subscription from the 2nd of May until the 16th of May. To talk more about this, we have Mr. Karthik, who's from Groww Mutual Fund, and he'll be explaining us more about the index and the fund. So let's dive into it. Welcome, Karthik.
So thank you very much, Shankar. I'm really excited to be part of your show. I'm really looking forward for this interaction.
So Karthik, let's start out with the most basic of all questions. So could you please tell us what the Nifty Non-Cyclical Consumer Index is?
Certainly, when you look at non-cyclical consumer index, these are the companies which are part of our day-to-day lives. When you look at the products and services which we use on day-to-day basis are part of this particular index. When you look at this index, it forms, it consists of industries like consumer durables, consumer services, telecom, textiles, etc. If you were to deep dive into this particular index, this index is made up of 30 stocks, which follows this particular theme. And the composition is based on last 6 months free float market capitalization, which is fixed based on the end date of January and July. And one interesting thing to be kept in mind here is individual stocks weightage is capped at 10%.
Okay, got it, Karthik. Can you do a little more deep dive into these industries? I mean, what are these industries? And also, can you tell us what are the top constituents which are a part of this index?
So when you look at this particular index, this is made up of 7 industries. To begin with, it starts from FMCG, consumer services, consumer durables, telecom, textiles, etc. If you were to deep dive into these industries, FMCG being the world's largest in nature, it would have food, then, let's say household items, etc.
Right.
When you look at telecom, it involves communication as well as the IT companies. Consumer durables would mean essentially we are talking about the lasting goods, which involves furniture, the so-called white goods, right, electronics, etc. When we talk about services, it would have a broad spectrum of services, which includes transportation, let's say media and etc. So basically, it's a collection of companies which are part of our day-to-day lives.
That's great, Karthik. So why should someone consider investing in this index?
Well, there are certain interesting reasons one could look at. This particular index gives you access to top 30 stocks in this space or in this theme.
Right.
The second reason is when you compare this particular index with Nifty 50, especially during market volatile times or what we call it as a drawdown, this index has fallen lesser compared to the Nifty 50 itself. So when you look at last 11 observations, 9 times there has been an outperformance. The index has fallen lesser compared to Nifty 50. That's the second reason. And third interesting reason is all the industries and what we looked at, right? All these are the essential part of our life. So irrespective of economic condition, there would be that resilience in these companies, right? So that also would mean that these stocks are defensive in nature. So these are certain reasons I think one could consider. But however, I personally feel as an investor should consult their financial advisor before they take their investment decision.
That's great, Karthik. Could you give us a clearer picture on how the Nifty Non-Cyclical Consumer Index compares with the Nifty 50?
Returns is something what everybody is interested to know, right? I think when we talk about returns, it makes sense for us to compare returns for different time periods, what we call it as point-to-point returns, right? You look at 1 year, 3 year, 5 year, the multiple time periods. When you compare this particular index performance against Nifty 50, let's look at the broad spectrum. 1 year returns, Nifty 50 index has given close to 21% return, whereas our index has given about 31%. When you look at the other spectrum, that is 15 years,
Right.
Nifty 50 has given about 15.5% return, and the non-cyclical consumer index has generated a returns of about 17.5. So there is a very clear outperformance of the index when compared to Nifty 50.
And regarding the current valuations, how should an investor look at it?
Yeah, so valuation is one factor an investor would be interested to know. But there has to be a certain parameter to measure that valuation. I think one of the most common valuation factor what we look at is PE ratio, the price to earning ratio, what we call it as, right? I mean, whatever is the market price vis-a-vis we are compared to the earnings per share. So every 1 rupee of earning, to get that 1 rupee of earning, how much are you investing? So essentially, as an investor, I would always want to invest lesser for every 1 rupee of earning. And then when you look at PE ratio, it makes sense for you to compare it with. In this case, when we are comparing the PE ratio of this index with its own historical numbers, it gives us a perspective, right? So last 10 years, average PE is about 101. In the last 5 years, the average PE is about 141. The current levels is about 59.5. So this is where we stand. The valuation looks fairly valued, or relatively compared to its own past, fairly undervalued.
Right. So given everything we've discussed, why would you say now is the moment to look into investing into the Groww Nifty Non-Cyclical Consumer Index Fund?
So to answer this question, let's look at 3 simple factors. The first one being the valuation factors, what we have already discussed, that being one. The second one, the income of Indian middle class, and the cities are growing. So this would result in an uptick trend in the consumption, right? That's the second factor. And the third one being companies are moving from being unorganized to organized. All these points would help an investor to consider if they're interested in long-term investing. However, this fund has been classified as highly risky. So it makes sense for someone to consult their financial advisor to decide on this.
So what are the features of the Groww Nifty Non-Cyclical Consumer Index Fund?
So the scheme aims to generate long-term capital appreciation by investing into the stocks which are part of the underlying index. The investments would be in the same stocks and the same weightage, etc. So the objective is to generate returns in the similar lines to that of index before the expenses. So however, there can be no assurances or guarantees which can be given that the scheme objectives would be met. So investors who are looking to be part of these securities can consider investing into the scheme. So the scheme strategy revolves around reducing the tracking error to the least possible extent by rebalancing of the portfolio. Considering the changes in the weights of the stocks in the index, as well as the incremental collections and the redemptions into the scheme. So investors should read the scheme documents in detail and consult their financial advisor before investing.
Thank you, Karthik, for breaking down the Groww Nifty Non-Cyclical Consumer Index Fund. It's been a valuable discussion we've had today.
Okay.
And to our listeners, remember to do your research and consult a financial advisor before taking any investment decision. The Groww Nifty Non-Cyclical Consumer Index Fund is open for subscription from the 2nd of May until the 16th of May.